From a macro perspective, what are options bets telling you maybe about the future direction of stocks right now?
Okay, so looking into this crystal ball, which we refer to as implied volatility, through year end, the biggest concern, the biggest pickup in hedging activity, Brian, is all in the value trade. So we talk about the rotation. Options clearly much more concerned about value and the reopening than they are about growth.
Are people paying up in the options market for bets to hedge against the surge of COVID and potentially new lockdowns?
They are. And, that's one thing we weren't sure about. Our own head of biotech research is saying that Delta variant will peak Labor Day, which is earlier than I think the options market is in fact pricing. And if you look at it, one thing that is even more concerning is this really started off on the index and ETF level, broad-based hedges in retail, in IWM, but we are now seeing this pick up on individual stocks as well. So yesterday and today, we're starting to see hedging demand pick up specifically in the airlines as well, not just on the ETF level.
What kinds of trades are people paying for? Are people generally paying more for puts, betting against things, or paying more for calls, betting on things from a very basic level, obviously?
Very basic level, paying much more for puts, and then the amount that they're paying is starting to rise. Now, we're not at what I would characterize as peak worry. So, to give you kind of a dollars and cents example, right now, one S&P put, if you sold it, you can buy about 15 equivalent S&P calls. That metric was as high as 30 times 2 months ago, right? So we're not at peak worry, but that number continues to rise, which means people are willing to pay more and more to own a little protection against downside right now.